Well, good morning, lovely people of YouTube. I want to do a quick update for you today just because my new wife has gone out, so I've got a bit of space in the flat. Let's talk about natural gas and then we'll talk about a couple of the other things. Interesting day yesterday, and the market really moved quite unexpectedly with that JOLTS job number. Now, it's become more of an important number recently. I'm not too sure why. We've got more jobs coming tomorrow with NFP. And we've also got some jobs coming later today. We've had CPI from the Eurozone from Germany, and we've got more CPI number and various bits of data coming out, including US GDP. Market's all a bit mixed right now. It's been a really difficult trading time, but I think commodities add a little bit of stability to our package here, and natural gas has been quite good. This is where we stand on natural gas, just holding above that sort of opening gap over the weekend. And holding above these moving averages. There's the 200, the 20 and the 50, and the range bottom, or the channel bottom below us, and then that very important spike low that we got just below that range, stopping out a few short hands. And you can see the big gap up. There was a bit of FOMO that came in, everyone got left behind, a lot of the short hands sort of piled in, long hands got stopped out, a bit of a mix up, but that's okay. That's what the markets do on purpose. We're still aiming for that top line there, where that green arrow is at the top of this channel, but that's where we're aiming. That's above $3 at about 3.15, maybe 3.17 now. So even if we do get up through $3, there's a risk of this falling back down to about 2.75, maybe down to the channel bottom again. So we might still just be trading between this channel. Ultimate target's about $3.50. Up into this pink zone here. I've covered the reasons why multiple times, but so far so good. We've taken a 25% position long, bearing in mind we've got that weekend gap below us. If you look on the daily chart, you'll see that weekend gap still lingering. We did fill the rollover gap though, so that's done and dusted. That's this little gap from yesterday in between in that rollover candle. This is on the NYMEX chart. But we've still got that weekend gap below us. So gaps don't always get filled immediately. So sometimes it takes a bit of time, but they almost always get filled. So I think we're going to have to visit $2.55 at some stage, and possibly $2.50, $2.45 again. Let's hope not for now. See if we can get a bit of a rally going and then a pull back down to that gap. So we're 25% long, and I'll look to add further dips. And we've got the reports coming out tomorrow, Thursday. So let's see injection and all that sort of thing, how that affects the market. And then WTI, once again, just diddling in the middle, nothing on that. Wheat dropped down below support and has just rallied back up again. Bitcoin, with the announcement of the Grayscale ETF approval deal, Bitcoin rallied, but it was also assisted by the fact that the dollar came off a lot after the JOLTS report. JOLTS report showing that jobs have dropped to somewhere around 2021 levels, new jobs, JOLTS jobs. So pretty poor number, and the dollar didn't like it, and that sort of undid a lot of what Jerome Powell said at Jackson Hole about continuing to raise rates. And the expectation, the Fed Watch Tool expectation for rate hikes going into the next meeting, September, that will stay the same, went from about 78 to 82%. So market's now pricing in the fact that we won't get any rate hike, and maybe we won't get any more at all. I think that's kind of what the market's thinking. So that's pushing the dollar down a bit, and we've seen a rally in the stock markets and so on. So that's commodities. Sugar, interesting for those of you who are trading sugar, we're still looking to sell this at some stage. We just opened right now. This just gapped up as this market opened, and we're approaching this top line, which is the 78.6. I think we'll get to at least that. We could get into this pink zone and maybe even higher, up to about 27, 28 cents before we move down on sugar. So sugar looking pretty strong, bearing in mind that this price is at a very, very, very high level longer term. Sugar's been down at 9 or 10 cents, 11 cents, 12 cents. We're now at about 25 cents, back up at 26 cents almost, which is where we started shorting originally around here. On the first occasion, we started shorting a bit lower. We lost that trade. Then we started shorting around here at around 26, and we made some good profits back on that trade, really recovering some of those losses and some. And now we're back up at that level where we started selling. So every time we get into this level, there's a bit of a sell-off. I think we might have to just go a wee bit higher, back into this pink zone, 26, 27 cents, maybe higher. Gold, well, we're long on gold. That's holding up pretty well. Just going to scan through these. Interesting that Palladium has actually I don't have a very good view on Palladium long term. It goes into catalytic converters, and there's more and more pressure on combustion engines. So I think Palladium doesn't have a bright future at the moment. We could get down to $600 on Palladium. We're at $1,200 now. That seems like a ridiculous projection, but is there going to be demand for Palladium going forward? Probably not. And there's the long-term chart. Well, it's a day chart. Here's $600, this line at the bottom. And you can see we've sort of made some huge movements here up into these highs around 3.5, and we've come all the way back down to 1,200. We could get under 600 on Palladium. So even though metals have been strong, Palladium has tried. It's given it a go, but it hasn't been great. And just looking weak, if you look at this daily chart, you can see that's angling down. We've got a downward trend line forming across those highs, and it's sort of a descending wedge pattern on Palladium. So if you're going to be trading Palladium, I'd be going short on that. But at the same time, I like platinum, I like gold, I like silver. I think they've all got to pull back a little bit. I'm not going to get out of my long position on gold. In fact, I'd rather add to it as we rally, or buy on dips, but just add to what I've got. It's not a full position. And then copper, well, depends on the economy really. And excuse me, the other one is uranium. Now, we've been long on uranium. We've got out of these long trades at around about where we are now. And I think because we're at the top of this range, if I just spread this out, you can see it's a definite range that we've been in for a long time. Between about $23, $24 on this ETF and down to this URA, down to $20, $19, $18, $20. And it's a range. But I think we're heading upwards, slowly angling upwards. And you can see from this trend line, I think we could just break that trend line, get back down to this green zone here, just above $20. And then I'll be looking to buy the URA ETF again on uranium. So just waiting for a pullback on that. When it comes to stocks, well, we've gone short on NASDAQ. We've got an interesting pattern here, potentially head and shoulders. I don't think this is going to last though. I think we're going to see potentially if the dollar comes off, which it may well do after, well, we've got NFP on Friday. Perhaps the dollar will continue to drop. Dollar's reached a pretty critical level. We'll see on the DXY chart. So if dollar does drop off, then these will continue to rally, probably. But for now, we're short and just trying a little short. We'll get out of that, wait to see what happens. So we're short at 15,400. We'll get out around 15,250, 15,300, maybe 15,200, just to dip back down to that 50-period moving average. And the same goes for S&P, same sort of pattern. We could get a little higher. This head and shoulders line, the beautiful sort of channel line, trend line, it's almost parallel to this one from along the bottoms. We could just touch that and then pull back. If these are going to go, we're at the crucial levels, the head and shoulders levels. They're either going to bust higher and move to new highs, or they're going to pull back. So, but for now, we're just playing a little short on these, and we'll wait to see what happens. And then the only other stocks I'm interested in are these four on the chart. AMD, I'll be looking to sell into rallies. Let's just go through them very quickly. AMD, a rally up into these red lines, moving averages, and this downward trend line potentially. There goes a chopper outside. There was a chopper buzzing around all day yesterday. I don't know if they were doing exercises or, hopefully not, looking for someone who had fallen into the sea and drifted away. So AMD looking to sell up into these levels where this downward trend line is and the moving averages, and potentially this horizontal line. It'll depend on how chip stocks go. I think if there's going to be any weakness, it's probably going to be in chip stocks, and therefore we're looking to short. We're already short NVIDIA at these levels. Remembering that NVIDIA could go up to $520, which is more or less the top after hours, after their earnings report, and that's above this trend line. But we've just kept this trend line in, and the top of this trend line is about $510. I'm still looking at this gap below us. That red line in the middle of the gap is a previous all-time high, and there's the big gap. So I think chip stocks, I think there's just been a lot of hype. Look, NVIDIA could go much, much higher, but I think probably it's run out of a bit of gas, and there's been a bit too much hype about NVIDIA. If you look at this long run up since the beginning of the year, we've gone from $120 up to 500 and something, 120 up to 520. Stocks can do this, but not sustainably forever. There's going to be some pullback at some stage, particularly as other chip companies start to develop the same technology and provide some competition. So that's NVIDIA. And then Apple up into this gap here. I think we've got to fill that gap at some stage, so we're not there yet. Still got some place to go. But this gap on Apple is between 190 and $185. So somewhere in this call it 192 to 185. I think we've probably got to get to the top of this gap on Apple. And if Apple does get to the top of that gap, and we got another little gap there and another little one there. So if Apple does get up there, and the dollar coming off does assist stocks, Apple will probably be the first one. I think it's got to fill that gap. So that's going to drag the whole NASDAQ and S&P up with it, and those should rally along with Apple. And what happens when we get to this gap, I don't know, but we'll try some shorts at the top of that gap, probably on Apple. And then Microsoft, well, we were looking to buy at these dips. We did buy a little bit, got out, not for long, fell back down quickly, so not much on Microsoft. That's all for now on those. The most interesting chart actually on the Forex majors was this dollar yen chart. Look, I've now drawn this megaphone. It was a flat top megaphone. Yesterday we rallied up, fell back down again sharply after the JOLTS job report, back below this line. This pink top is the 78.6% Fibonacci. Let me squeeze this out. This is a 4-hour chart, or squeeze it in rather, not out. So that's the 786. It's a very neat, beautiful chart. And that was the level that the Bank of Japan intervened at last time. It's a level we've been watching very closely. The whole market thinks Apple's going up to 150, 152. Not Apple, dollar yen. That's maybe a Freudian slip. The whole market thinks dollar yen's going up to 150, 152. That's what everyone thinks. Everyone's a bit long on this, I'm afraid. I'm not too sure if we're going to get there, but we may do. I don't know. I'm basically short on this, but I'm willing to hedge again. Once again, if we get up above that high yesterday. But after the JOLTS job report, we've now formed a proper megaphone. It's not a flat top megaphone. There's the descending bottom. There's the rising top. A megaphone is a very powerful reversal pattern. And I'm looking for and hoping for this red arrow today for us to move down to about 143. And if we can eventually break this pattern, probably bounce around in it for quite some time, but eventually break down through this pattern. It's a strong, powerful reversal pattern, megaphone, foghorn, expanding pattern, whatever you want to call it, that's what it is. And if it works out, and a lot of the time they do, if it does work out, some of the time they don't, bear that in mind. But if it does, then that's the direction we're heading. Probably a bounce off that line at the bottom, back up into the middle somewhere. And as long as we don't get up above this pink zone, the 78.6% Fibonacci, we should be okay. But, anything can happen. A lot depends on NFP tomorrow and jobs. Now, jobs seem to be a favorite number, a favorite factor, favorite influencer of the Fed's overall plan and rhetoric. And the market's become aware that jobs are possibly now even more important than the inflation numbers. The Fed, Jerome Powell and his hitmen have been harping on about their desire to cut down on jobs, the demand for workers, and the commensurate pay rises that we've been seeing. The pay rises because of demand for people, not enough people to fill the jobs, people asking for more money. Pay rises have been going on, and that drives up inflation. So jobs are really, really important. Big rally on the euro and the pound. Pound's just maybe made a false break down below that support line, as I said before. That's the support line. We dipped down below it and now we're above it, and we tested it from the top. As you can see, we just came back down to test it, came back to the top of that horizontal support line and moved higher. That's a classic fake breakout. So we're long on the pound and the euro, and again, a lot depends on how the dollar reacts to the jobs numbers tomorrow. NFP, we've got some more jobs numbers, and GDP later on today. So that's the overall scenario. A real mess, really, in terms of the entire market. And we've got this bullish stock market. We've got the Fed being hawkish on rates. We've got jobs numbers fluctuating up and down, blowout NFP numbers, potentially another blowout one tomorrow. I think they're going to want to show that the jobs numbers have dropped, though, that there's less demand for jobs. But that's going to boost the stock market and drop the dollar, boost things like gold. So either they declare that the jobs have got worse and the markets rally, which brings more FOMO and more greed and more sort of economic optimism in, or they say the jobs numbers are blowout, or they, if they are, which I don't think they are, we're going to see the markets come off. We're going to see the dollar rally, and I think as well the Fed needs to keep the dollar in check because that's getting a little bit out of hand for various reasons. So I'm going to play this outro of my rap song. Have a fantastic day. It's a big mouthful. I've just spoken a lot on different things, but that's the overall perspective. And if you're feeling a little bit lost in the markets, I'm not surprised because a lot of people are, and I read reports every single day from big banks and from places like Reuters and whatever, and the conflicting opinions are just astounding. We saw that the way hedge fund traders and managed money are trading the bond markets in completely the opposite directions. I showed you that chart in yesterday's video or the day before. Complete divergence of opinion. No one really knows which way this market's heading. Are we going to see new all-time highs on the stock markets, or are we at the top? I don't know. We've got the head and shoulders patterns. We've got everything indicating that the markets could come off, that the dollar should strengthen, the markets should drop, interest rates may carry on going up, inflation might play a role, whether inflation is going to be sticky or not, what we're going to see in the next inflation numbers. It's a real difficult scenario to trade, so good luck with it all, and I'll speak to you in the next video.